The Finance Act 2020, recently signed into law by President Muhammadu Buhari, imposes 50 naira levy on electronic transfer of money deposited in any bank or financial institution or any accounts on sums of 10,000 naira or more. The revenue, according to the Act, is to be shared based on derivation 15% to federal government and FCT and 85% to states. The new law, which introduces over 80 amendments to 14 different laws and takes effect from 1st of January 2021, however, cancels out stamp duty charge on electric transfers. The Act, among other provisions, notably exempted workers who earn 30,000 naira minimum wage or less from personal income tax and exempted commercial airline tickets from value-added tax. These are some of the key highlights of the Act as identified by PricewaterhouseCoopers. The notable changes introduced by the Act as identified by the firm include compensation for loss of office up to 10 million naira exempted from capital gains tax. Tax due on excess above 10 million naira is to be deducted by the payer and remitted within the time specified under the payee regulations. Minimum tax for companies in respect of returns for years of assessment due between 1st January 2020 and 31st December 2021 has been reduced to 0.5% to 0.25% of gross turnover less franked investment income. Cost of donation made in cash or kind to any fund set up by government in respect of any pandemic or natural disaster to be tax deductible subject to a minimum of 10% of accessible profits after other allowable donations. FIRS may prescribe the form of accounts other than audited financial statements for small and medium companies as defined under CICA. Service of notice of assessments and objections under CITA may be done via courier service, email, or other electronic means as may be directed by FIRS in a notice. Tax Appeal Tribunal may conduct its hearing remotely via virtual means using such technology or application as may be necessary to ensure fair hearing. Public character for the purpose of tax exemption requires an organization or institution to be registered in accordance with relevant laws in Nigeria and does not distribute or share its profits in any matter to members of or promoters. A small or medium company engaged in primary agricultural production may be granted pioneer status for an initial period of 4 years and an additional 2 years, making a total of 6 years. Gross income per personal relief purposes has been redefined as income from all sources less non-taxable income, exempt items, and income on which no further tax is payable. In the case of an enterprise, less all allowable business expenses and capital allowances. Exemption of low-income earners earning minimum wage or less from personal income tax. Goods liable to excise duties have been expanded to include telecommunication services provided in Nigeria as may be prescribed in the law or an order issued by the President. Reduction of import duty on tractors from 35% to 5%, mass transit vehicles for transport of more than 10% and trucks from 35% to 10% and reduction of import levy on cars from 30% to 5%. Taxable supply with respect to goods is defined to include where the beneficial owner of the rights in or over goods is a taxable person in Nigeria or the goods or rights is suitable, registered or accessible in Nigeria. Services include those consumed by a person in Nigeria, whether rendered within or outside Nigeria, excluding employments and in respect of incorporeal includes exploitation of a right acquisition or assignment of rights by a person in Nigeria and in corpora connected with tangible or immovable asset located in Nigeria. Goods exclude land and building, money or securities. A non-resident person that makes a taxable supply to Nigeria is required to register for tax and obtain TIN, include VAT on its invoice, and may appoint a representative in Nigeria for the purpose of its tax obligations. The FIRS may issue guidelines this purpose. Exemption of commercial airline tickets from VAT and hire or lease of agricultural equipment for agricultural purposes. Deletion of electronic bank transfer as transaction liable to stamp duty and introduction of electronic money transfer levy of 15 naira on electronic transfer of money deposited in any bank or financial institution on any account on sums of 10,000 naira or more. Revenue is to be shared based on the derivation 15% to federal government and FCT and 85% to states. Accountant General for the Federation to open dedicated accounts for each tax type for the payment of tax refunds to be administered by the FIRS and funded based on annual budget for tax refund for each tax type as may be approved by the National Assembly. For companies operating in the free trade zones, exception from taxes is subject to compliance with tax filing and returns obligation to the FIRS under Section 55(1) of CITA. Establishment of a crisis intervention fund of 500 billion naira or other sums as may be approved by the National Assembly and by way of trust as a sub-fund of the crisis intervention fund and unclaimed funds trust fund. Unclaimed dividends is a listed company and unutilized amounts in a dormant bank account outstanding for 6 years or more to be transferred to the unclaimed funds trust fund as a special debt to the federal government to be managed by debt management office and shall be available to the shareholder or account holder at any time together with the yield thereon. Balance of operating surplus of a corporation shall be paid to the CRF of the Federation on a quarterly basis. Finance Minister may effect a direct deduction from TSA or other accounts of a corporation to enforce compliance. Also, it is prohibited to reduce contract values or splitting of procurement to evade the use of the appropriate procurement method. Wow. Nigeria will not enter one chance. God. Always looking for means of exploiting and robbing innocent citizens, of which government has done nothing to comfort their sufferings. Nothing lasts forever. This regime, with all its accompanying evils, will come to an end one day. So we will now pay another tax from our remaining money after the first tax, instead of them to reduce what they collect as allowances and reduce their SA and SSA to free fund to run the economy. So Buhari's administration can never do anything we can be proud of. Oh, please God help us. We are pushed to the wall. Exploitation of the highest order. Okay. With the arbitrary increase in taxes and levies in Nigeria, the PMB government is no doubt borrowing a leaf from the defunct Soviet Union. So guys, let's hear your opinion in this country, in the comment section, because what is in this country is something else.